All right. We have some attendees trickling in, so let's just give a minute. A good morning and good evening, everyone. This is Michael Chen from HashKey Capital. Thank you for joining this call. Where is the Alpha in Crypto 2023? Just give us a minute, allow attendees, participants to dial in, and we'll start in a minute. Thank you very much. Adam, Roy, Emma, would you be able to change your, I guess, the screen name on your end?
Probably. Let's see.
And add maybe like
yeah, let me try that.
Yeah, like what I did, like Michael Chen add HashKey. So it's.
Where did you do that?
Well, for me, I right click
On participants.
Rename. There's
Yeah,
a little
click on participants.
Oh, got it.
Yeah.
So you want us to put name and company?
No, just I think I can. Yeah, like what Roy just did, right? Emma, you could just perfect.
Well, Michael, as I always do, I'm just copying you, man, following your footsteps.
That's maybe not the best.
I
life.
like Roy's schema. Let me try that.
Yeah. Gotta get that symbol there. I mean, you have a win in your last one by fucking not showing off.
There you go. Done.
Okay, then let's get started. Let's officially get started. Good morning for everyone joining us from Asia time zone, and good afternoon and good evening for those joining from US West Coast and East Coast time zone. My name is Michael Chen. I'm a Director of Business Development at HashKey Capital. I will be the moderator and host for today's call. I'm very, very pleased to have a number of our colleagues and partners and just good friends of HashKey joining me today on the call. And on the screen, we have Emma Cui, founders, general partners at Long Hash Ventures. And we have Adam Winnick, founders, general partners at Finality Capital Partners, FCP. And last but not least, my esteemed colleague, Roy Liu, investment partner of HashKey Capital, based in our San Francisco area for HashKey Capitals. So before I get things started, just to get a disclaimer going, today's call is for discussion purpose only. Whatever we said should not be construed nor should be intended as financial advices. The purpose of this call today is I'm gathering some very brilliant minds, veteran investors in blockchain and crypto venture space, Emma, Adam, and Roy, and just have a chat about, lesson learned in 2022. Last year, I think, was obviously an interesting year. What are the exciting topics or verticals that they are, excited about in 2023, this year's? And lastly, I think it's probably the million-dollar question that people are excited to hear about. It is, give me, some of your alpha ideas in crypto venture investments for this year's and beyond. So I think that's largely the sort of the three topics, if you will, I want to cover today. And if there is time toward the end, I'm happy to take questions, should there be any. And if you're a little bit shy for the audience to ask a questions directly, feel free to shoot me an email with the questions, and I'll certainly pass it on to the guest speakers today as well. So my email is michael.chen, that's C-H-E-N-E like Eric, at hashkey.com. Okay, so I'll get started. First, I just want to maybe spend a couple of minutes for the guest speakers today to introduce a little bit about themselves, and it's also about their firm. So maybe I'll start with Emma. Emma, maybe tell us the audience a little bit about, how you got into crypto, your background, and your firm's background.
Sure. Thanks, Michael. And thanks for hosting this amazing event. And really glad to be here. So I'm Emma. I'm the CEO and founding partner of Long Ventures. I bought my first ETH in 2016 after attending one of the Vitalik's meetups in Singapore. I remember it was a very small setup back then, 50 people in the crowd. If I remember correctly, I think Dr. Xiao from HashKey is actually in the crowd as well when I reflect on that meetup. So, but I didn't fully got into crypto in late 2017. In between, I spent some time in McKinsey doing consultant work until I saw really the light at the end of the tunnel. I felt like I had to get into crypto full time. So left McKinsey, set up Long Ventures in early 2018. So Long Ventures started off as a Web3 focused accelerator. And since then, we've kind of evolved into two pillars of business. Firstly, we still continue to run the accelerator. And I think we're probably one of the longest running Web3 accelerator in Asia. And really working with ecosystems that we're bullish on, such as Filecoin, XLR, Polkadot, to jumpstart their ecosystem. And the second part we've built out over the last 3 years is the VC fund side. So now we run two funds. The first fund is decentralized finance-focused thesis, and the second fund is focused on multi-chain infrastructure. So far, we've kind of invested in more than 70 portfolio companies, including some of the names the audience might have heard of: Polkadot, Astar, Dodo, Balancer, Trenches, Lead Protocol. So yeah, that's kind of a short journey. Glad to be here.
Thanks, Emma. Really appreciate that. Adam, I'll turn the mic to you. I know you're joining us from West Coast. Hopefully it's not too late time zone wise, but Adam, please let us know, how you got into the proverbial crypto rabbit hole, so to speak, and maybe a bit more about what Finality does.
Yeah, thank you. Well, it's a pleasure to be here, and I thank HashKey for the opportunity. So my story begins first Bitcoin in 2014. I live in Los Angeles. There's quite a network of YouTubers that live here and businesses built around YouTubers, and I heard about Bitcoin from a bunch of people very focused on the YouTube space who had heard about it from Brock Pierce. That's how I heard about Bitcoin. But it wasn't until 2016 I read an article by Fred Ursum about how tokens could bootstrap network effects. And that really fascinated me. The idea that you could have networks owned and operated by users. In the 1950s, giving out stock options was considered anti-capitalist to employees, and the idea, but that's now a very common way for most people in the world to make money, to change their lives, to create generational wealth, and the idea of tokens as a way to incentivize users and have users own pieces of networks that they help build just fascinated me. And I was sitting next to I was at a conference of a friend of mine who ran a conference focused on macro hedge fund research, and he was very instrumental in bringing pension funds and endowments and sovereign wealth funds to invest in macro funds, whereas mostly the domain of family offices. And Naval Ravikant was speaking about crypto to this audience, and I was an investor in Metastable, his fund at the time. And I'm sitting next to the Ivy League endowment CIO who said, "Wow, crypto's fascinating. Too bad institutions can't hold tokens." And that reminded me of a story my dad told me. My dad moved to Los Angeles from New York in the 70s to work with Mike Milken to help build the high yield bond market. And maybe not everyone here knows about high yield bonds, but the story of high yield bonds was it allowed entrepreneurs to build capital intensive networks using a novel financial instrument that originally institutions couldn't hold. And that changed. And with that, all the telecom infrastructure that we have today was financed by high yield bonds. And all the buyouts that happened with private equity firms was financed by high yield bonds. Here we sit today in 2023, tokens, a novel asset class that institutions can't really hold, Okay, I'm not so much focused on institutional investment in DeFi as opposed to institutional investment in the space to grow the space, to facilitate the adoption of tokens so that we can build more user-owned and operated networks where the people that build those networks can benefit financially from the creation of those networks. And so we're going to have all kinds of new networks, and we're going to have all kinds of new ownership models like DAOs because of tokens. And that's what got me really excited. So I created a conference several years ago, 5 years ago, to bring institutions in this space. It's called the Medici Network. There's not much on it online. It's 150 people once a year in Los Angeles, off the record, super secret crypto conference. You know, several years ago, I met a brilliant an early investor in the Ethereum ICO out of MIT, computer science, who convinced me that Avalanche subnets and the fast finality time of Avalanche was going to be a game changer, and there were going to be these alternative layer ones. So we invested relatively early in Avalanche, and that's kind of what got my investment interest peaked in the space. And then summer DeFi for me, more than anything, said there's a demand for block space. And my fund invests pretty much around that thesis of, I don't know where the demand for block space will come from and when it will show up, when and where it'll show, or when and where the demand for block space will come from, but I know it's there, and we want to invest in the suppliers of that block space. We want to invest in the people creating interoperability between those chains, the middleware. That's the focus of our fund. Even though Medici is sort of a network of across the range of the people that attend, it might be the CEO of Pudgy Penguins all the way to, you know, the founder of Axelar. So it's quite a range of people at Medici, but my fund focus is primarily on middleware. And you know, Michael, Roy, for me, just areas of interest to me today, we can talk about digital identity is a focus right now, shared security, and interoperability, in particular, messaging layers and the middleware that connects to it. So.
Well, let's save a little bit of that in a
yeah, no, I'm just for the crowd to ask questions later. Yeah,
appreciate the sneak preview. That makes sense. Great. Roy is my colleague at HashKey Capital. That's why at the beginning of my introduction, I didn't spend any time introducing who HashKey Capital is, but I'm sure there are some people in the audience attending today who is not as familiar about HashKey Capital. So I'll leave that to Roy to talk about obviously his background, how he got into crypto, and just, you know, maybe a few words on who HashKey Capital is as well. Right?
For sure. Well, first off, thank you so much for having me here today. And Emma and Adam, it's a pleasure to be on this panel with you. And Adam, just to your credit and discredit, I think the Medici conference is very well acclaimed and well regarded, but I'm not so sure it's as secretive as you think it is.
Well, no, I mean, it's just I don't do a lot of marketing for it, so there's not a lot of, you know. But yeah, I appreciate that, Roy.
Yeah, of course. Pleasure to be here with you. So, hi everyone. My name is Roy. I joined HashKey as partner about 6 months ago, and as our head of US, while I'm primarily on the investment team, I'm also growing our team based in San Francisco, as well as expanding our presence across the United States. So I got into crypto in 2017 when a founder friend of mine was telling me about his ICO. And I was like, oh, what is that? How do I get involved in that? And he was like, oh, it's basically squeezing money out of thin air. I was like, that sounds like a zero-cost business model. So it took me a while and many conversations with founders and builders in the space to truly embrace the potential behind the technology that is blockchain. So, and once I realized that, Web2, we say Web3 all the time, but very few people, I think, even in today's world, truly understands what separates Web2 from Web3. To me, at least, Web2 is about digitizing information. So whether it's on your desktop or mobile or whatever channels of communication, it's about digitizing information. And Web3 is about digitizing value. And that is a game changer that I think very few of us who are in the developed world can appreciate. right? We're seeing great adoption already in some of the third world countries where their currencies are depreciating, where they have limited means of capital transactions across borders or sometimes even within borders. And this digitized value is a life-changing technology to the rest of the world now, and I think will be to some of the more developed countries that, you know, I assume most of the folks on this call live in. So that's how I got into crypto. I was a founder at an enterprise AI company at the time that was invested by SoftBank. Didn't work out. I had a technical background before that, so I didn't have enough business understanding. Didn't work out. But my mentors advised that, you know, that they thought my personality would be good for venture capital. So I talked to more mentors and eventually worked at the growth equity team at Lightspeed Ventures, and then left that job to pursue my business degree at Stanford, graduated last year, and then thereafter joined HashKey about 6 months ago. For those of you who have not been familiar with HashKey, you know, we're currently managing over $1 billion in assets, deploying out of our $500 million Fund 3. We've been lucky enough to back some of the most enduring companies in Web3, including DYDX, CoinList, FalconX, for example, since we started in 2015. And legend has it, we were the very first institutional check into Ethereum. You know, that definitely predates me, but, you know, I'll take the credit for it and gospel it whenever I can. So there you go. I'm very excited to be here and talk about, you know, some of the learnings over the past tumultuous year, and then what we're excited about in the coming year. But good to be here. Back to you, Michael. Great.
I think the folks are joining this call really want to hear the forward-looking, you know, ideas, predictions, thoughts for 2023 and beyond. But I feel like before we get to that point, you know, it makes sense, I think, just to you know, invite the guest speakers today to do a quick recap of 2022. I mean, for me at least, you know, 2022 last year was almost, you know, a story of two halves, right? I do feel like, you know, we've seen some very good progress in the tech stack development in blockchain, crypto, right? Zero knowledge here and there, et cetera. But obviously, you know, there were, you know, a lot of, you know, noise, bad news, and just, you know, outright fraudulent activities in the space as well. But, you know, I do all encourage the speakers to keep the comments on this question short, just so we have, you know, time to really address, you know, the forward-looking 2023. But, you know, I want to turn to Emma again first. You know, maybe just, you know, give the audience a little bit of your thoughts on just a recap of 2022. And as you know, we're investors, right? Crypto VCs, builders. You know, what are some of the lessons learned as crypto investors or builders from last year, 2022? You know, I'll start with Emma on this one.
Sure. Happy to take it, Michael. Thanks for the question. I think it's funny how 2022 has played out very similar to 2018, which was the first year I joined crypto of the last bull market. You know, like when you're deep into the bull market, everybody's like, oh, this is the super cycle. It's just going to last forever, right? This is institutional adoption and all that BS, until you realize actually, hey, there is gravity. And I think after being through the whole year, there are definitely quite a few learnings kind of, you know, coming out at me. The first and most important thing, I think, is proper risk management. I think we all know that we're really lucky to be exposed to a new industry, right? That's experiencing a paradigm shift. So the game is to survive, but how to survive is not easy. So I think when people talk about risk management in crypto, everyone is thinking about market risk. True, it's extremely volatile, right? You're dealing with assets that can go up 100 times, 100 times, 1,000 times when the time's good. It can also draw down 90%, 80% when times are bad. So any leveraging can be damning, right? So it's just about the time, you know, when you will get liquidated. So market risk, I think everybody's talking about, but I think there are other types of risk people are not really paying attention to. And in traditional finance, because I spent 7-8 years in TradeFi before joining McKinsey and before joining crypto. So I feel like there are definitely learnings from TradeFi that can be brought into crypto. Right? Because in TradeFi, you talk about risks such as counterparty risk, you talk about custody risk, you talk about credit risk, all these different type of risk that has not been kind of made aware, I think, in the crypto world. And I can go into a bit of depth with each, right? Say, for example, counterparty risk. One example would be lending platforms such as Gemini, putting all the users' assets through their Earn program into Celsius. Right. Mm-hmm. So that's a massive counterparty risk. So when you're putting your users' assets on third-party platform, you have to evaluate, right? How do you diversify? What kind of framework do you go by? That's a massive counterparty risk. And then custody risk. Many projects put their treasury on FTX as a custody solution, right? And right now, I think at this stage of the market, there's a lot of custody solutions. You can choose to self-custody. You can choose to put your money on third-party custody. You can put it on exchange, maybe sometimes due to regulatory requirements or sometimes due to the nature of the business, right? So I think as an institutional player in this market, everybody has to be a lot more aware of custody risk, right? How are you spreading the risk, diversifying that again? Then the last one is the credit risk. Genesis had 1 billion uncollateralized exposure to 3AC. Right, which is a massive problem. And I think the silver lining of that is we start to see how DeFi works really well, because all the DeFi loans are over collateralized, right? When the protocol says it's the price that you're going to get liquidated, they do it when the price point is hit. There's no subjective opinion, right? There's no manual intervention. And so you can see from what happened last year, all the DeFi protocols are working extremely well, if they're not subjecting to any hacking. The work as designed, but a lot of the CDFI are where most of the masses are, right? So I think people have to be aware of credit risk when they deal with stakeholders and do business in this market. So first and foremost, I think proper risk management should be foremost and most important factor to consider. Also, another learning I've kind of reflected a lot on is particularly relevant to VC, right? I think you have to really know your niche and how you stand out, because you can employ a lot of, as a fund, you can deploy a variety of strategies, right? You can play in primary, you can do secondary, you can do hybrid. If you're a hedge fund, you can do market neutral, momentum driven. But every type of strategy needs different type of expertise and different type of risk management, right? So how do you manage the downside, but at the same time stand out from the crowd? Given, I think, compared to the last cycle, there's a lot of validation of this space and there's a lot of capital flowing to the space, right? So for us, we reflected on that and we choose to focus on primary market, early stage deal flow, right? So we feel like our accelerator setup plus VC fund should serve us well in terms of being able to source deals in very, very early stage, pre-seed to Series A. And those can generate synergistic value in the long run. And lastly, I think it's also important to have a thesis and stick to it, but also with an open mind to refine and validate the thesis in a methodological way, right? Because if you think about the bull market from mid-2020 to end of 2021, a few trends took place. Firstly, you had DeFi summer, a DeFi breakout, right, in mid-2020. After that, it's followed by GameFi, and then it's followed by a wave of metaverse, and then we had the whole alt layer one play. And if you just kind of formal into the latest trend, you could kind of get caught up in the narrative and pay high price for valuation, right? And not really have the opportunity to pick the winner. So I think those are some of the lessons I think really kind of made us kind of think back on, the key lessons we can take into the next bull market.
Yeah, no, thanks.
Yeah, back to you, Mike.
The last point, thank you, Emma. The last point really resonated with me as well. I just think, it's obviously important to have a thesis and have a conviction, but it just, the Web3 crypto space does evolve, I think, at much faster pace or velocity than your traditional, let's say, consumer healthcare. So, have a thesis, but also have an open mind to validate it. Doesn't mean you keep changing it, but it's important to to, I guess, like I said, continue to validate that. And those are really good points. Adam, I'll turn the mic to you. You obviously spend a lot of time, talking, meeting with founders, but obviously with Medici conference, you are meeting with, the capital allocators as well. So, when talking about some of the lessons learned in 2022, love to hear your thoughts, obviously from your experience as crypto VC, but also, if there are comments you can make about lessons learned from some of the capital allocators that you're spending time with, that'll be interesting as well. But the floor is yours.
Yeah.
Sort of the lesson learned from last year. Yeah.
Yeah, I think I'll try and keep it short. I mean, the first thing I'll just say I think is worth talking about is, there may be groups that have like innovations, like Solana was very innovative in a lot of ways, but the ecosystem was full of high value projects with low circulating supplies. Okay, so you just had this market that was really high, really inflated, and it caused a lot of problems because people were borrowing against these values that weren't truly market prices. And so the whole space was just completely inflated, and a lot of people built a lot of value. And candidly, if you're going to run a blockchain, you need a lot of value. You don't want to put a lot of money, a lot of transaction value on a blockchain if there's not a lot of security there in terms of dollars. So it kind of served everyone's needs to have these projects that are worth billions and billions of dollars, because you could trust that you would put billions of dollars of transactions on them because they're worth billions, but they weren't really worth billions because the value of the projects were not really worth that. Okay, so I can dig into that if you want to more, but let's assuming the audience understands the idea of like high value projects, low circulating supplies, it keeps the price artificially high. So what does that mean? So there's all these innovations like the Move ecosystem, like people building new kinds of virtual machines that compete with Ethereum, all wonderful ideas. And when money was super cheap and there's a lot of value there, it was worth trying all these things. I'm not counting any of those guys out. I'm not going to be the guy to do that. I want everyone to win in this space. But, as an investor that's talking to allocators, that's raising money, and we're a first-time fund, we've invested our own money for most of the time, I can't be all things to all people, and we have to find our own ways to compete. So where do we turn our efforts? Well, for us, to me, the lesson of 2022 is Ethereum. Okay, what did Ethereum do? It moved from proof of work to proof of stake to answer a lot of questions of critics about its ability to evolve and adapt and meet certain institutional questions around the sustainability of a proof of work consensus mechanism. But Ethereum had other questions, right? Now there's questions of centralization, but at the end of the day, the Ethereum ecosystem, whether it's Ethereum or side chains or other people running EVM chains that are compatible, Ethereum compatible applications, that to me is just put a tremendous wind in the sails of the Ethereum ecosystem. Proof of stake started with Cosmos, okay, with the Tendermint protocol. Cosmos is a really exciting place for people to invest, but at the end of the day, Ethereum is as a token that people trust, a wide ecosystem. So a lot of stuff that happens in Cosmos, maybe Cosmos breaks out, but at the end of the day, it's also a test bed for things that are happening on Ethereum. And so we've turned our attention to Ethereum. And candidly, I'm a little later to the game as an investor. Like my partner invested in the Ethereum ecosystem, but we didn't have a fund for many years. So where do we find opportunities as a new fund looking for alpha in the Ethereum ecosystem? Well, it just so happens that there's a ton of things to do. But that's a 2023 story, and you asked about 2022. So I'll save that for when you ask me about 2023.
So to recap, just want to make sure I get it. So you're saying a couple of things you point out for lessons from 2022. One is, I suppose, high value, low circulation is a bad idea. And also Ethereum, you clearly like it, the ecosystem. Is that a fair recap of sort of your lessons?
I would say the EVM ecosystem, anything EVM.
Okay.
So it can be Ethereum compatible. So, we're invested in a project called Monad that just came out of stealth that is doing parallelization of on Ethereum. So, someone like Mistin Labs, Sui, is doing that on the Move ecosystem with their Move VM. But this company, Monad, is trying to do some similar things on the processing side, parallel processing with with an EVM compatible chain. So,
Okay.
there's lots of things to do. There's lots of entry points. There's lots of opportunities. And so we've turned our attention there. We can talk about things like EigenLayer later, which we think is really exciting. But at the end of the day, look, the Ethereum, all these other EVM chains, we think there's value, and they may have a lot of value just being a backup when Ethereum gets really expensive. Okay.
Mhm.
Intel, AMD was partially created by customers of Intel, okay, who said, I don't want to buy from you and have you be the single source supplier of chips.
Yeah.
We need a second supplier. We can't rely completely on Intel. We don't want to give you that much power. So Intel helped create AMD in that. So other EVM chains that aren't Ethereum may just be AMD, and AMD is wildly valuable. Okay.
Yeah.
But
fair.
and AMD's broken out at certain points in its history when Intel has dropped the ball, which Ethereum may do. But we're just like very invested in the EVM ecosystem. That's a big focus for us.
Got it. Okay. That's
And this confirmed it. And last year confirmed it for us.
High value circulation back. That certainly makes sense. Roy, turn over to you. Some of the lesson learned or just takeaways from last year.
Yeah, I'll keep it short with more exciting topics in 2023 to talk about. It's very hard also to top or even to follow what Adam and Emma had just said. I would like to first say, 2022 was full of ups and downs. And, one of my biggest takeaways is compliance and diligence were key and will continue to be key. And I would like to applaud our ops team here at HashKey Capital that we came out of Luna and FTX, for example, unscathed. And that's not an easy thing to do. We also came out of a lot of opportunities that seemed great at the time, but in retrospect, were just a lot of herd mentality amongst VCs, and we had the resoluteness to turn those down and focus on our own alpha. So I think I just want to applaud our team for their accomplishment in 2022. And out of those ashes, what's interesting is as CeFi imploded, DeFi adoption went up 30 to 70%. And we're also seeing communities calling for more transparency. And as a result of that, more hybrid exchanges, more CDFI. So more exchanges that are going to put their transactions on chain. And we can even see CoinMarketCap, for example, added a check mark next to their exchange list for those whose asset reserves can be proven. And I think we're going to see even more of that happening. We're going to see more DeFi protocols trying to KYC their users, trying to get compliant. We're going to see more CeFi exchanges and custodians trying to be more transparent. And so out of the ashes, I think there's a lot of good things happening out of this reckoning. The other thing that I'll double click on with very little add was the biggest hallmark of 2022 for me was the merge. I mean, it was, Ethereum's move from proof of work to proof of stake is the software equivalent of moon landing. I mean, right? Like at the time it had 400,000 validator nodes, and to upgrade all those nodes together in a decentralized fashion to a new paradigm of consensus, that's a huge feat. And I think, it also accomplishes a couple of things. First, of course, it proves that the team behind Ethereum is capable of evolving it and improving it for the years and decades to come. It's also a huge step forward to be more environmentally friendly. And I think that's really important when we're looking at, 1 to 2 cycles away of potential mass adoption. I mean, if 1 billion people come in and use Ethereum and we don't have enough energy to support that, then there's nothing there. So I think, having Ethereum become more environmentally friendly is not only just politically correct, but also paves the way for a sustainable mass adoption. Lastly, as a VC, I also have to say, we are looking at a lot of very exciting technological and infrastructure upgrades coming up in 2023, and we've already placed some bets in those verticals, which I'm happy to talk about. And the merge being successful is a huge proof point that a lot of our bets are now more likely to succeed than they were before.
It does seem to me like, Ethereum is the one thing that connects a lot of the speakers today, right? From how Emma got into crypto 2020, 13, 14, to Adam has mentioned about EVM compatibility being, important things, to what Roy just said last year being, the merge being, almost like the moon landing, or, one small step for mankind, I suppose. But why don't we, Roy, to stay with you, because I'm going to do a quick reverse order for the next questions, which is, I think people are excited to hear from you guys about, 2023 predictions. Predictions can be a false error, but, outlook, but maybe just address what are some of the things in crypto, in Web3 that gets you excited? What are the things, you might be, spending more time thinking about it, working on it, in 2023. It could be obviously, verticals. It could be maybe some of the bigger macro themes. It could be, regulatory. I think it's on a lot of people's mind these as well. So a 2023 outlook, what are the things that get you excited? Let me just do a quick reverse order. I'll start with Roy, or continue with Roy on that, and then Adam, then, save the best for last to Emma. All right. So Roy, to you.
Yeah, sounds great. I'll just kind of continue the thread from the end of the last conversation. So the Ethereum merge really gave folks in the blockchain industry a lot of a huge confidence boost for a lot of scheduled upgrades. So the first thing that I'm really excited about in 2023 is technological upgrades in modular blockchain, in MEV, in AA. And I'm going to come back and dive a little bit deeper into it and what that means to the general user as well as the investor. The second thing that I'm really excited about is more CDFI and more hybrid exchanges, which I alluded to in a prior question as well. And number three is, I think Web3 infra will become more productized, as Emma alluded to that from between 2020 and 2022, there were a lot of use cases that sort of became its own subsector, and I think the infrastructure layer is going to become more productized, and we're going to dive into it. So while trying to keep it relatively short, there are a couple of significant upgrades coming up with the Shanghai upgrade and the Cancun upgrade to Ethereum. The Shanghai upgrade will open up staked Ethereum for redemption. So what does this mean to the industry and to investors? Some folks are saying that fewer people will stake their tokens. They're mostly withdrawal. I take the contrarian view. I think this would actually help to decentralize and secure the Ethereum ecosystem, because once folks can know that it's a two-way street, they can deposit and withdraw, they're going to feel more comfortable staking their Ethereum nodes. And we're seeing a lot of projects that are trying to increase the level of competition in this space. I think Lido previously, I checked, had something like 60% of the market out of a 17% total Ethereum that is staked. Ultimately, this is a structural opportunity to up to 70 to 80%, we think, of the Ethereum that could be staked. So there's a lot of exciting things there that will make Ethereum a lot more decentralized and secure. Cancun upgrade is also really interesting with proto-dank sharding. So it's basically adding blocks as a data structure to the EVM architecture. In plain words, it means more seats at the theater. It means more ships in the sea. It means that the layer twos can be a lot higher in throughput while the gas prices can come down. So again, all of these upgrades, these planned upgrades, they do mean three things simultaneously. They mean the ability for the technology, the world computer, that is Ethereum, and several other layer ones that are kind of following suit, not to ignore them, to evolve. And number two, it means that we're getting ever closer to mass adoption. We're getting closer to a future where social apps and gaming apps can transact on chain with near zero gas fees. We can accommodate billions of users in parallel, simultaneously. That's number two. Number three, it means new frontiers are being opened up, right? With modular blockchain, separating consensus to execution to data availability. And that means opportunities for investors. So I think, I'm very excited about 2023's technological upgrades for the proving technologies evolutionary, paving the way to more mass adoption, and then also new opportunities for investors to continue to support the ecosystem. I think I've been chatting for a while, so I guess we won't have time to get into CDFI and infra productize, but hopefully we'll have another time to chat. But I'll stop here.
No, that's right. And again, I also encourage, the panelists to be interactive on this point as well. So if, Emma, Adam, Roy have any questions to each other on anything said, feel free to jump in and ask, questions just like what an audience would. But, Adam, I'll turn the mic to you and talk about some of what gets you and your firm, FCP, Finality Capital Partners, excited, about 2023 and perhaps beyond as well.
Yeah. Well, first of all, I'm glad Roy took the tougher technical, conversation, investment opportunities, and explained, blobs in layman's terms, because that was pretty good, Roy. So, look, I think I'll start with one thing I think is just really interesting right now is digital identity. If people are familiar with self-sovereign identity, which is sort of a subsector of the digital identity space, you can think about digital identity as like Tomasic, for instance, started a company called Affinity, right? And I think it handled the government contracts for 172 governments to build digital passports related to the COVID-19 vaccine. So we spend more of our time online. We spend more of our time, having to attest information now and prove our identity when we're doing more things online. And that market is about like a, $6 billion market, different numbers you could see for digital identity. It involves a lot of things. I mean, COVID-19, government spending is one big thing. In crypto now, with the regulation that's come down, pretty much every application that was built by someone, especially in the United States, but probably elsewhere, needs to consider KYC, know your customer, AML compliance. Okay, so all the digital identity guys want to figure out how to go beyond doing government contract work around digital health or vaccine passports, because that's kind of old news. But KYC AML has a toehold, is important, like in other markets outside of crypto, but in crypto it's becoming more and more important. And crypto users are also users that care about this idea of self-sovereign identity, that you have governance over your data. It's your data, that no one holds it but you, or if it sits in different pockets, it's never compiled in one place except by you. No company holds it, but you create a channel for people to talk to, request the data they need from the people that have your data. Okay, and KYC AML, the regulatory compliance issues that are coming down, I believe have some headwinds, or sorry, some tailwinds for people that are focused on this opportunity, because when you sign into a Web3 application, you're going to need to provide some KYC AML information, and that will see adoption. That will happen through wallets. Okay, it will happen through plugins that work with wallets, and it will happen in a way that will get more people to develop some comfort level with the idea of governing their data and how it's used. And the really exciting part of that is once that gets established over the next few years, and there's a sort of window where the people that are able to have the right product for KYC AML for the Web3 space have an outside chance of attacking the online advertising market and rethinking that, which is $1 trillion market. It's one of the largest markets in the world. So the question in my mind is, can you turn a problem on its head? Can you hang a lantern on your problems, okay? By saying, hey, this regulatory crackdown is good for crypto. It's forcing KYC AML compliance solutions, which Web3 people don't want to do in a centralized way. They want to have a self-sovereign solution. And once they get comfortable with that, then they'll get comfortable with that in other settings, like when they interact with advertisers on applications like social media. And so that's something that we're thinking about, and I can get into other things, but let me leave that idea out there by itself as something that we're really excited about. And it's a big space. It's hard because there's so many companies focused on this, but there are many, many different approaches here too. And so we actually are, I can't talk too much about it yet, but we're making our first bet in that space, and we're excited about it and to see where it goes.
Okay, it's very clear, very clear. Turn the mic to Emma, and again, as Emma mentioned at the beginning, in addition to being a very good venture investors, and Emma also runs, I think probably one of the best incubator accelerators out there in crypto. So Emma really, I think, meets and spend time with founders and builders who are rolling up their sleeves and building cool things off the ground. So Emma, what are the things that get you excited for 2023 and beyond? As a crypto investor, first and foremost, a venture investor, but also maybe as somebody who talks with builders and founders, on a very much regular basis. I'd love to hear your thoughts.
Sure. I think Roy and Adam has covered some really interesting areas, right? Obviously, we all love Ethereum. I think it's like the beacon of hope, right? Where a lot of assets are, where a lot of the, super passionate, most brilliant coders in this place are at. So no doubt about it, super bullish on the future of Ethereum. And I think what Adam talked about in terms of digital identity is also an area that we're quite interested in. But maybe just to take a step back, I think what they've mentioned is one thing that's happening constantly in crypto, which is you're kind of flying the plane while also building it, right? Like last year, the transition from proof of work into proof of stake is kind of like changing the engine right when you're flying the plane. So now, I think we're at a space where you had a few breakout use cases, right? DeFi, NFT, metaverse, GameFi. You had a taste of that. However, we quickly realized there was a lot of limitations, right? Due to high gas fee, lack of UI UX, lack of scaling solutions and whatnot. So I feel like for us, we want to focus the next 2-3 years into infrastructure play. Because without a robust infrastructure, you can't really support a lot of the massive mass use adoptions people are excited about, right? So, so for us, when we talk about infrastructure, I think it can be broadly categorized into 4 or 5 areas, right? Firstly, within the Ethereum ecosystem, scaling solutions is super important. That's why we made a bet into ZK-Sync. To try to see, would that come out ahead? I think ZK-Sync launched their mainnet just a couple of days ago, as well as Polygon. So there's quite a few players in that space. We're going to see who is going to have first mover advantage and who is going to gain adoption. And then secondly, we want to look at like interoperability solutions, right? Like, because constantly Ethereum is great, but we always want to keep an open mind. What if there's better framework out there, right? Such as Cosmos. Cosmos has proven to be a very resilient ecosystem, right? Even though Luna was a terrible incident. However, when Luna was winding down, Cosmos SDK was the one that has experienced actually real life stress test, and it's able to process high transaction speed, right? Process all these winding downs. So Cosmos is one ecosystem that we're quite excited about in terms of interoperability framework. And they have a few key upgrades coming this year as well, like the IBC, ICA, interchain accounts, inter-blockchain communication modules and whatnot. And we've also recently made a few bets into that ecosystem. Cross-chain messaging, XLR. That's why we've launched the first cross-chain accelerator together with XLR early this year. We're hoping to see more true cross-chain applications out there, because today when people talk about cross-chain, it's largely about just moving assets aside, right? It's kind of like lock assets up in one chain and issue IOUs in another chain. And I'm sure everyone in this room have seen lots of hacking reports, right? So bridges sometimes are not really safe. There's a spectrum of designs. There's a lot of different type of security flaws comes with different type of design. So we're hoping to see more secure cross-chain solutions that's been built on cross-messaging protocols. And then lastly, I think middleware is where we want to see more solutions such as account abstraction to help with UI UX and to help with innovative use cases. And particularly, I think account abstraction can be really, really interesting. Because if you think about last cycle, right? Last cycle, I remember in 2017, MetaMask as one of the leading decentralized wallets, right? It has maybe 500,000 users, and those are like hardcore, hardcore crypto people, hardcore DeFi users. They will just use anything, even if it's super difficult to use. But during DeFi summer, MetaMask user shot up to I think 30 million last time I checked. So that's about 60 times increase. So another 30 times increase from here, we're looking at 1 billion users, mass adoption. That's what the holy grail everybody's talking about, right? But what's going to prompt in that? I think it's going to rely on one, more innovative breakout of use case, right? Whether it's SocialFi, whether it's Web3 plus AI, but you also need account abstraction, middleware to help with that UI UX. To really bring on the next billion users. So that's an area we want to make a few bets. We already did. So we invest into Gnosis Safe, which is the smart contract wallets that holds perhaps the most assets, I think, outside of the centralized exchange. Actually, what happened last year after the collapse of TX, there has been a massive inflow of assets moving from CD5 platforms, moving from centralized exchanges into Gnosis Safe. So it's probably the only player that's kind of coming out looking better in the last market collapse. We've also made a bet into a company called Lead Protocol, which does decentralized access network, and you can leverage its SDK to do all sorts of account abstraction, maybe some of the benefits such as bundleless transactions, bundled transactions, gasless transactions, social recovery, a lot of those things that could make people, that are not in crypto today, much easier to get into crypto, hopefully in a year or two from now. So those are some of the areas we're excited about. I know it's a lot. I think as Adam says, right, there's just so much things happening and we're trying to keep focused, but it's just like everything's so exciting. Yeah.
No, that's why, that actually is a good segue to lead to my last and final questions. And I think,
Michael, can I just
mindful. Yeah, Adam, you want to?
I just want to say one thing about Emma, like you made a great point, which is there's so many things to focus on. Like, how do you focus? And I think like one common theme you're hearing across all of this stuff is, we want external adoption, but I lived through the bear market, okay, investing through the bear market. It's like and I remember Salesforce.com, it was called Salesforce.com back then, and they charge their users monthly, okay? And one of the things that saved their business is that they converted it to annual membership, okay? And their customers committed, and that saved the company. So my thinking on this is that, like, what can this business do? And a lot of their customers were other tech companies, okay, that needed this service. What can you do? We're trying to survive a bear market. I'm not a developer. I'm not building the products of the future. I'm backing them. I'm hoping that people figure out how to bring on the next billion users, okay, or a billion users, okay? But in the meantime, there's money that came into the ecosystem in the last run, and all those customers, all those companies need solutions. They need middleware solutions, okay? They need things, and it's not relying on external adoption. So the smartest thing you can do in a bear market, if you're investing in a down market, is find things where people need solutions and they have money for them. And look, my digital identity play I'm talking about, I'm not sure that's the right way to think about it. That is like that's more of like my rocket ship bet, because I'm not sure that's like what people need today. But I thought it'd be fun to talk about, because I don't know exactly where this audience's level of understanding is, but middleware is exactly the place you want to be investing. It's also the most technically challenging. And I mean, I have a partner that helps me evaluate these things, okay? But that is where all these solutions are going to need these services, and there's money today for that, and it doesn't rely on the ecosystem growing outside of the people that are in it today.
Yeah, no, I agree. And one thing I always like to say is that, crypto venture investing is like internet venture investors are in circa 2003, 2004, something like that. And we don't need to find the Amazon of 2022, in 2023. If even you can find the Yahoo or eBay, right? And then, that's already job well done, sitting at that particular year. Like I said, I think we're doing great on time. I want to be mindful of, your time and the audience time as well. So I will, I'll end with sort of a final question, because a lot good things to digest, to unpack, right? But I'm going to ask a little bit unfair question it's like just 30 seconds to each panelist. If you have just to give one alpha idea in crypto venture investing in 2023, what that is. Again, let me define a little bit what I mean by the alpha idea. By alpha idea, I mean, it being a vertical or a sub-vertical or something, I think that will outperform the broader crypto, right? So just think about it, if you hold half Bitcoin, half Ethereum, that might be the beta of the crypto. But, this idea as a venture idea, likely can outperform the broader market.
And you want a public accessible idea, so a token someone can buy.
Whatever's on your mind, but I don't think I'm looking for a token ticker. To be clear, right? This is not a podcast, Telegram chat for that, but for venture investor, So 30 seconds each, may be fair, may not be fair, but I think it helps audience to crystallize their takeaway. So, Roy, I start with you. What is sort of your, one alpha idea in crypto venture investing in 2023?
Well, I think every smart investor should just give their money to you, Michael. That's the answer. But, it's really hard, right? Because that question is sort of like a misnomer, in that I don't think 2023 is the year about alpha. I think it's not the year to reap; it's the year to sow. We saw, venture valuation started really coming down in 2022, and it's continued to be depressed. So there are just so many to pick from. It's like a buffet. Right, so we made a bet in ZK technology for scalability in Aztec and in Max. We're investing in middleware and developer tooling to improve the user experience through companies like Cosmology that's signed up basically every zone Cosmos. We're also improving across the stack at the infrastructure level, like space and time, that's creating a decentralized data warehouse, which wasn't even possible like before until now. So we're also chatting with a lot of companies that are serving Fortune 500s. It's sort of interesting where it's kind of like playing hide and seek or catch me if you can. So it's the NFTs kind of like set the market ablaze, and then now Fortune 500s are now coming in using NFTs to try and connect with Gen Z, connect with these Web3 users through their royalty programs, through more NFT launches, and we're seeing some folks doing a lot of interesting stuff in there. We're also seeing, the interest rate kind of flipping. So there are opportunities in bringing real world assets on chain finally. After years and years of conversation, maybe next year is the year where we can find an outlet for on-chain liquidity with real world GDP. So I totally, didn't give you one thing and give you 1,000, but it's really hard because next year, I think this year, 2023 is the year to sow some seeds.
Okay, that's more than 30 seconds, but I think there's some good stuff in there. Adam, what about you?
All right, I'll do 30 seconds. I'll do one private, one public, okay? But this is not investment advice, okay? And so on the private side, EigenLayer, we're very excited about. It's introduced a novel primitive called restaking that will solve many problems in the Ethereum ecosystem. It'll allow, the premise of it is shared security. So leveraging Ethereum collateral to help bootstrap other middleware services that can share security with Ethereum and the validators that stake Ethereum. So all new projects, they could have a token, but they borrow the validator set of Ethereum. And so it's harder to corrupt each of these middleware services. More middleware services get started. They don't need $1 billion worth of tokens of value in their tokens to get up and running. That means more middleware services to support better app development, which means more users into crypto. The other thing that I think is interesting is Chainlink and following CCIP, which is their messaging protocol, to connect all the chains. We are going to live in a multi-chain world, and you want, as an app developer, you want a single place to plug in, so that, and a single API that other projects can plug into, so you can get all the services and resources you need. Sort of like a operating system, if you will. So those are my ideas.
Wow, it's really hard to follow after Adam's ideas. I totally agree.
But Emma,
those are solid ideas. He's really telling you the alpha. I think 30 seconds. So to me, I feel 2023 is full of alpha. Right. So if you're looking into getting into this industry in the long run, the best time to deploy would be 2023, 2024, right? Before the next bull market. I feel if you want some kind of general allocation, look at the big market cap, Ethereum, Polygon, a lot of those big market cap, that will do really well in the next couple of bull market. But if you want some of the secular plays, I think what Adam talked about is very, very exciting. And for us, of course, I think I also want to emphasize on account abstraction, because I do feel that, for us to get to the next big point, you need to bet into the access point. Right? Whether crypto is attractive as an asset, or whether crypto is attractive because of the numerous Web3 use cases everybody has been thinking about and trying to build towards that future, what people need at the end of the day will be access point, whether centralized or decentralized. And given what happened last year, I think there's a big shift into decentralized access point. And whoever can provide that access point in a seamless way, I think it's going to win very big in the next bull market. So that's where we're going to put our money on.
Great. Well, if you have real convictions about alphas, you should put your money on, and that's always a sign of conviction. I think we're running out of time. We did receive a few questions by email and in the chat board. I do apologize that we probably don't have time to address them, but I will definitely address some of these questions later on via email separately. So before we go, in case the people on this call want to get in touch with you guys, with Emma and Adam or Roy, maybe in case your fund maybe is fundraising, so they want to get in touch, find out more. How do they get in touch with you? Emma, we'll start with you, maybe.
Sure, I can leave my email. What's the best way? Do I just type it in the chat?
Can you type in the Q&A window?
Yes, I think no, I can only type to host and panelist. But why don't I just I think you guys will probably provide some follow-up email, right? Why don't we provide
maybe just say it out loud, like
sure.
If email or Telegram, just So yes.
Yeah. Feel free to follow me on Twitter and Emma Cui, and also my email is emma.cui@longhash.vc.
Okay, so that's okay. Adam, how do folks
So I don't do many of these, so it's funny. Emma, you're learning from you. I was gonna say Michael Chen at HashKeyCapital.com. You email Michael, but no. Listen, if someone wants to email me, they can email me at adam@finality.capital. That's fine. Medici has a website, and there's a little online form there that I look at that people, or if they're interested in Finality, they can fill out a little form there, and I look at everything, and we can go from there.
Great.
And that's at themedici.org.
Okay.
Yeah, for me, it's pretty simple. If you want to find our information, you go on our website, hashkey.capital. If you really want to talk to me, you can find me on Twitter, RoyCCLU. I do respond. It's not a bot. And email is roy.liu@hashkey.com.
Great. Thank you very much. We're 8 minutes past the hour. I really want to thank Emma, Adam, and Roy for spending time. I personally really enjoyed the conversation, the dialogue, learned quite a bit, solid ideas, and thank you very much. And of course, before we sign off, the usual disclaimer, as I said it before the beginning, this call was purely for discussion purpose, and anything that was said on the call, is not meant or construed nor intended to be financial advice. Great. On that note, thank you very much, guys.
Thank you, everyone.
There's a lot of work ahead. I do want to put one final word of little marketing from HashKey Capital, HashKey Group. We're hosting the Web3 Festival in Hong Kong this year. It's between April 12th and 15th. Should be a good Web3 event, well attended career list. So if anybody is interested to attend the Web3 Festival in Hong Kong in middle of April, you can get in touch with me as well. Great. On that note, thank you very much, and have a good rest of the day.
Thank you, Michael. Thank you, Adam and Roy.
Bye, guys.
Thank you, Michael. Thank you, everyone. Bye.